What's going on, y'all? This is David W. Williams, also known as Diamond Dave. We're doing Market Mondays for July 13th, 2020. And so, what we do on Market Mondays is we do a really quick, short, concise video that's really designed to get you talking about the markets, create some conversation amongst you and the members of your community about the markets, because our goal is to start having working class and poor black people having marketplace conversations become more and more common. And the benefit of you doing that is that once you start to understand the power of the markets, when you get introduced to some type of market-based information or some education, it's not going to be a big leap from where you are currently are now to that particular education piece, because it's something that you've talked about on a regular basis. So our goal and what we endeavor to do is to have people that look like the members of your community, the people that talk like the members of your community, to start talking about the markets, creating conversation amongst yourself, and then having you piggyback, right, on the conversations that we're having on this particular platform. So my job is essentially to introduce you to these topics and to have you take these topics and expand on them amongst the people in your particular area. So let's go ahead and get into it. So we talked about earlier today is July 13th, 2020. What we saw in the market today is it opened up green. What's going on, John? Appreciate the like. It opened up green and turned red as the day went on. There's a lot of reasons for that. We're going to talk about it. So the NASDAQ composite closed negative about 213. It had been up around 2%, closed negative around 213, right? The S&P 500 closed negative around percent. It hit a peak, right? And then it fell as we got towards the remainder of the day. Same thing with the Dow Jones average. It was up around a little under 1%, and then it fell the same way as the day went on. So we saw with the three major indicators is that they opened early and they fell as the day went on. Now, one of the reasons that people believe that this took place is because as the day went on, they got a lot of news about California essentially issuing out new ordinances about having shutdowns across the state in certain areas like bars, I want to say maybe nightclubs, also gyms. And so they put a lot of uncertainty and fear into the market. What's going on, Monique, and what's going on, Levon? If you could do me a favor and like the video, I really appreciate it. So what happened is that because of that uncertainty in the market, we think that that may be the reason for the sell-off as the day went on. So what I'm going to look forward to do is trying to see what do the indicators look like in the morning. What does the futures market look like in the morning? And then as the day goes on tomorrow, does it continue to stay red or does it maybe potentially go green? Because what we're seeing is that the media is hammering these COVID numbers so hard, it's creating a lot of uncertainty amongst people because they may feel like we're going to revert back to what it was maybe 2-3 months ago, where essentially everybody is sheltered in, and then the lack of revenue going through these particular businesses is going to hammer the economy. So what we saw is that a lot of people decided to sell off later today as opposed to first thing in the morning. And so what I'm interested in seeing is that Tuesday, Wednesday, Thursday, Friday, as we get closer and closer into the week, how are things going to look? And let me also add something in. We're having a lot of financial institutions report earnings this week. What we may be seeing is a lot of early fear that those particular financial institutions are going to have very bad earnings reports. So we're already starting to see some weak hand what I call weak hand behavior. And when I say weak hand, what I mean is that we're starting to see people sell off earlier because they're already in their mind mentally anticipating, right, a lot of very negative news coming from these financial institutions. And what we got to understand is that this game is primarily psychological. And so people's mentality and their behavior as a group determines how they conduct themselves in the markets. So now we're going to go into jump outs, right, in which we're going to talk about 2 or 3 companies that jumped out today, some of the things that they did that you can kind of look into a little bit deeper to kind of understand what happened in those companies and maybe that they're a good place or not a good place for you to put some of your capital. So what we're going to talk about is what everybody's been talking about the past few days, which is Tesla. So Tesla has been doing like a parabolic run over the past 2 weeks. It's approaching earnings, I believe, sometime next week. It opened up really high, but it closed down around 3%, right? Around 14.97. However, it rose to 17.41 during the trading day. Currently at this time in which I put together my little presentation, it was green. So Tesla opened up very high, and then what we saw is over the course of the day, it started to fall off, right? And it closed lower than what it rose, but we're seeing that once we got into the aftermarket, it continued to go green again. So what we may have seen was a sell-off because there may have been some resistance around that $1,700 mark emotionally. People couldn't emotionally wrap their head around paying more than $17.41 for a Tesla stock. So then we started to see a sell-off, right? Well, we also saw with Amazon. Amazon closed down around 3% at 3,100, but it rose to around 3,300 during the trading day. So Amazon is another company that I believe is going to report earnings next week or sometimes later this month. We saw it open very high. It rose up and then it fell back down over the course of the day, right? And we see that at 33.41 is when we started seeing a lot of resistance, right? To somebody paying that kind of money for an Amazon stock. That's when a lot of demand got exhausted. And it's currently also is green in the aftermarket. Google closed down around 1.7 at about 1,500. And it also rose around 1,576. So with these three jump out companies, what we're seeing is that they opened very high, they opened green, they hit a certain price point, and then they started to fall over the remaining of the day. Some people may say that's because of the news of COVID, or some people may feel like that's just the emotional resistance to paying for that particular stock at that price point. So it was just natural for it to have a sell-off. So what I'm going to look for over the course of the week is whether or not these particular companies start to recover. They're green in the aftermarket. Do they open tomorrow green? Do they gap up at open tomorrow? And how does this new news about California and other states closing down, how does that affect the overall markets? And how does it also affect these individual companies? Now, what we're going to go into is a really quick topic that I like to talk about. And we like to kind of end everything off with a topic. We're going to talk about support and resistance. Now, I'm not a big technical trader, but I have my own personal perspective on technical analysis. And so what I'm going to do is I'm going to give you my perspective of support and resistance. It may be some benefit to you. You may want to go do further research, and it may contradict the person that you may have learned it from. And I'm not saying that they're wrong. What I'm saying is that this is just my own personal perspective of support and resistance based on how I see it. So when you're looking at a particular chart, what you're going to see I don't really do candlesticks. I normally do a line graph, but I will also sometimes do candlesticks. What you're going to see is as the price goes up and you start seeing buying action, it falls back down. And then it may go back up and it may fall back down. It may go back up and it may fall back down. When we're seeing the falls, that's what we're going to call resistance. And normally what I define resistance as is that's where there's an emotional block with the market and spending more for that particular price for those shares. To me, the resistance is 100% emotional. What's going on, Teeth? If you could do me a favor and like the video, I appreciate it. To me, the resistance is 100% emotional. I don't try to create a logical definition for why there's a resistance where the particular, this is happening in the market, or this is happening in the market, or this deal went through. To me, buying and selling in any market is emotional. The reason why somebody buys something is 100% emotional. And if somebody's buying something, then somebody else also has to be selling something. So the reason why somebody's buying or selling something is 100% emotional. So to me, if there's resistance in buying at a certain number, it's always emotional. There's an emotional block at that particular price point where the person cannot create the emotional justification for buying at that price point. So what I like to do is look at resistance, because what I want to do is look at a company and say, where does the market have a lot of emotional resistance to paying more than this particular price? Because if I see it approaching that price again and it's hit that resistance, right, a certain amount of times, I may believe that, you know what, it's primed to run through that, or it's going to hit that resistance again and fall back down. And what we saw with Tesla, for example, over the past week, last week, it hit 1,400 almost 10 times during the 5 days. On that Friday, when it hit 1,400, it shot up. So it kept bouncing at that 1,400 wall, and the market emotionally could not deal with the fact that I'm going to pay more than $1,400 for a share of Tesla. On that Friday, when it hit 1,400, for some reason, people now could emotionally deal with that. And what a lot of times you see in the market is that when a price point hits a ceiling, right? When it hits a ceiling, a certain number of times, people now can emotionally accept paying this amount of money for a share. So a lot of times the market, when it first hits it, they may have issues paying that, where you may see a company run up, hit an all-time high, and come back down. Why? Because it's never gotten past that point ever in the history of the company. And then it may fall down very, very, like a lot of times you see within the next few days to a week, that thing will sell off again. Because the market, the rest of the market can't deal with paying for this new price. But a lot of times when you see a company hit that resistance, hit that resistance, hit that resistance, and then bounce through, emotionally the market has become accustomed to it being this price because it's been that price a few times before. right? And it's like any new information that hits your brain, it can take a moment for your brain to cope to the new reality, right? And so a lot of times if there's a new reality, your brain may have a problem coping with that new reality because your brain's frame is the old reality. And for a lot of people, that's why situations that change for people cause a lot of resistance and phobia, because their brain has to now adapt to this new reality. Let's talk about support. So support is when you're looking at a particular graph or chart. As the price goes down, it's like it hits the floor and bounces back up. And it goes down and it hits the floor and bounces back up. And it goes down and hits the floor back and back up. That's what we call support. And that's normally the lowest the market will accept for that particular share value, right? And it's also emotional. Okay? So we're seeing a particular share sell off. So it may lose $10 during that day. It may hit a price point and it start to bounce back up. Because mentally, the market in their mind, they believe that this particular share is worth more than the current price. So then what we do is we buy more at this current price, and then we start to increase what we're willing to pay per share. So for example, when that information about Facebook came out, that they were losing advertisers, Facebook was around 245, maybe 240. It sold off. It sold off and then it hit a support. And then what did Facebook do? It bounced right back up off that support. Because in the mind of the market, they can't accept that Facebook is a 210 stock or 216 stock. Facebook has to be greater than that. So once it sells off, in their mind, this is a great time for me to get in. Because I can't accept in my mind that Facebook is 220 or maybe 215 or 216. So now this is a signal for me to buy. Like I said before, it's all emotional. So when you start to understand that these particular support and resistance levels are emotional, you're trying to look for where is there a lot of emotion at the market. And then once you look at it from a line standpoint, then you can break it down to the candlestick level and start seeing how much activity was at that particular price point. So let's say we'll take hypothetically a resistance of $100, right? How much buying and selling activity was at that $100 price point? How long did that last? What's going on, Sherry? So if you start looking at that, then you can start to see how long was the market resistant to that particular area. So where did it open at? Where did it close? Where did it start again? And you start to understand how the market amongst that $100 price point, it was a little bit over, a little bit under, a little bit over, a little bit under. And then finally it either broke through or fell back down. And that's the emotional resistance of the market. So that's how I see support and resistance. I use it as a historical landmark. I don't really use it to project into the future because I understand that we're dealing with emotion. And the reason why somebody may accept something or not accept something last week may have nothing to do with why they accept something or don't accept something today. There's things that can affect the market that have nothing to do with the company. There's things that are going on in the world that can be put inside people's heads that can make them accept new realities. And we have to understand that all of this is going on at the same time in the mind of the crowd, right? So I don't look at historical support and resistance and try to say, well, you know what? That's how I'm going to base my trading paths in the future, because I understand that I'm dealing with an audience in which outside forces can put seeds inside their brain and make them accept new realities, even if they don't want to, that have nothing to do with what is going on inside the stock market, to where now they will accept a new price or a lower price for a particular company. So this is the wrap up of Market Mondays. Like I said, we want to keep it really, really short. And we want to give you something to talk about amongst your peers. If you know somebody that can get value from this, share it out. To me, if you have a friend that you know can benefit from the content, I would appreciate you sharing it out or telling them about my particular page. If you have any questions, hit me up in the comments. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.